How do we use the stop automation action? The stop automation action is used to define exactly where a strategy should stop and how. You can stop the automation with or without squaring off positions, either for the entire portfolio or only positions created by that automation. In this example, we are creating a simple automation which runs daily at 9 o'clock and places orders in Nifty options. Now we need to define the stop condition. The stop action is required whenever we want to stop the strategy. There can be multiple actions associated with the stop condition. Stop automation without exit will stop the automation without exiting any of the positions created by the automation. Stop automation with square off positions will square off the entire positions in the user's portfolio. If we want to square off only positions associated to this particular automation, we can select check only for this automation. In this case, only the positions created by the specific automation will be squared off. For example, once we place the order and set a target or stop loss of 10 rupees, we can stop the automation and square off the position. Similarly, we can stop the automation whenever it is 3 o'clock by attaching the stop automations block to a wait trigger. In this case, the automation will wait till 3 p.m. to stop the automations in case none of the other stop conditions has already triggered. This is how stop automation works. Please note, if we do not define stop automations at the required points, the automation will continue to run without stopping. It is critical to define stop automations at all relevant points. Let's recap. Stop automation action defines when a strategy should stop running. It can stop the automation with or without squaring off positions, either for the entire portfolio or only positions created by that automation. Defining stop actions is critical to prevent automations from running indefinitely. Got questions on stop automation action? Comment below or ask us in the FYERS community. Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.